Okay, welcome YouTube visitors and brothers and sisters in Christ. Hope this camera's working and it sounds good. I'd like to do another edition of Around the World News. It's been a long time since I've updated you on financial and political information and news. I call it Around the World News. Anyway, let me get right into it. A lot has happened since we last met. January 31st, we had a big sell-off in the stock market. What was it, 666 points or 665.75 points? Anyway, an ominous number, as you know. 666 is the mark of the beast found in Revelation. Also, this occurred on February the 2nd, which was the 33rd day of the year. And as you know, there's tie-ins to the, that's an Illuminati number, 33, which is also a Masonic number. So 31 days in January, February 2nd makes 31, 32, 33 days. Very interesting, isn't it? That there was a sell-off on the 33rd day of the year, 666 points. What's that telling us? I don't know. Further declines, maybe this is a year that the stock market really breaks and collapses. But I think we're going to trend a little higher here. There's going to be sell-offs. If you're a trader, I would be selling these rallies. There's ways to make money in the market, but I would not be a long-term investor right now. It's very treacherous. If you have a lot of money in the stock market, I'm not a professional. I'm not going to claim to be, but personally, I would not have a lot of money in the stock market right now. I would be looking at things like commodities, gold, silver, platinum, and mining shares, gold and silver mining shares, okay? Because those are the things that are very much out of favor and undervalued right now, all right? So let's get right into this right now. I want to cover this. I don't know how long it's going to take, but let's get right into it. The Dow Jones Industrial Average jumped back up 500 points in only 20 minutes on February the 9th. Since the stock market sell-off began on the 2nd, stocks have lost more than $6 trillion in market capitalization globally, and the MSCI World Index has erased all of its year-to-date gains. All right. Russian security officers have arrested several scientists working at a top-secret Russian nuclear warhead facility for allegedly mining cryptocurrencies. The suspects had tried to use one of Russia's most powerful supercomputers to mine bitcoins. Amazon is preparing to launch a delivery service to compete directly with shipping stalwarts UPS, and FedEx. Amazon.com said on February the 8th that it would start delivering Whole Foods groceries via its fast shipping Prime Now service. An asteroid up to 40 meters in size and only discovered 5 days ago is due to skim past the Earth on Friday, February the 9th. Now, that has already happened. Asteroid 2018 CB will pass by at just less than 1/5 the distance between the Earth and the Moon. Now, this was written on the 9th. So, I'm reading the 9th's information, which is, it's pretty relevant for the last several days. So, anyway. Headline here in an article, Jim Rogers says the next bear market will be the worst in his life. I'm going to read some headlines to some articles here. This is the worst momentum swing for stocks in U.S. history. Bloomberg.com article. Only half of Americans actually own stocks. That's at marketwatch.com. Dr. Paul Craig Roberts writes an article called The Plunge Protection Team's Fraud. That can be found at paulcraigroberts.org. O-R-G. What else? U.S. federal spending is totally out of control. New York Times. Well, we know that, don't we? The Pentagon cannot account for $800 million in spending. That's at zerohedge.com. Rising U.S. inflation from metals to meat. Yeah, we're going to see higher inflation this year for sure. And that's going to put downward pressure on the U.S. dollar, which will be bullish for gold. So again, there's reasons to buy gold and silver and precious metals. Okay. The Republican leadership finally gave up any pretense of fiscal responsibility Thursday after Rhino Republican Senate leader Mitch McConnell forged a budget deal with Democrat Chuck Schumer that abandons all of the previous spending caps that have partially limited government spending for the past 2 years. This new spending bill in the House that will raise the deficit by almost $1 trillion over the next 2 years. This follows in the footsteps of back-to-back Obama administration trillion-dollar deficits that Republicans loudly condemned. A fully predictable consequence of this unwise compromise is that it will help Democrats blame the growing deficit on the Trump tax cut rather than on their own participation in this increased spending bill. In the House, among Republicans, only the Freedom Caucus bloc of 30 conservatives opposed the bill and pointed out the obvious, that this only accelerates the road to national insolvency, when in the future all U.S. revenues will be needed just to pay the interest on the national debt. So writes Joel Skousen from World Affairs Brief, dated February 9, 2018. David Stockman writes, the U.S. economy is threatened by two giant problems which cause all others to pale into significance. We are referring to a rogue central bank that has become an absolute enemy of capitalist prosperity, and a fiscal doomsday machine that is hostage to the ceaseless budgetary demands of the welfare state. The welfare state and the baby boom's demographic imperatives, both ends of the Acela corridor, are completely oblivious to these twin menaces. So writes David Stockman in an article, Two Elephants in the Room, dated February the 2nd. Now, what we are seeing is not inflation in a traditional sense, but stagflation. We are seeing elements of price inflation in necessary goods and services, as well as property markets, but continued deflation in the rest of the economy. The Fed in particular will continue to ignore negative fundamentals because they are seeking to deliberately pop the market bubble they have created. I pointed this out, that's what the Fed does. It creates prosperity, inflation, recessions, depressions. Comments by agents of the Federal Reserve reinforce the notion that the central bank is about to crush the bull market bubble. Jerome Powell, the new Fed chair, has been quoted in Fed documents from 2012 discussing the market bubble the Fed had created and the need to temper that bubble. In other words, Powell is the perfect man for the job of imploding stocks. Powell even predicted in 2012 that when the Fed raises rates, the reaction by stock markets might be severe. Interesting that markets would plunge the very day Powell assumes the Fed chair position. The plan of the global economic reset and Powell's role in overseeing the next stock crash. Powell is being portrayed by the mainstream media as Trump's guy. Quote, Trump's guy, and the change in Fed leadership is now being referred to as Trump's Fed. This is not random rhetoric. I can't think of any other president in the past that was given credit by the mainstream media for the activities of the Federal Reserve. Trump's control over the Federal Reserve is zero, but the actions of the Fed over the course of this year will undoubtedly crash the very equities markets that Trump has been foolishly taking credit for since his election. Yeah, you know, people like Peter Schiff said that Trump, while taking credit for the stock market boom, is going to also have to take credit for the crash when it occurs. Of course, Trump had nothing to do with the stock market boom. It's the Fed that's putting money into the system, and it's going into stocks. And of course, there's buybacks and so on from corporations. Continuing, if you have been tracking the behavior of stocks over the past few years, as well as the increases in the Fed's balance sheet, you know that stock markets have risen in direct correlation with that balance sheet. In other words, the more purchases the Fed made, the higher stocks climb. So the Fed announces its latest round of balance sheet reductions on January 31st. The reduction is much higher than anticipated, and within a week, we witnessed the largest two-day drop in years. I believe that the Fed will not only continue its program of interest rate increases, even if stocks begin to flounder, but that they will also unload their balance sheet as quickly as possible. The Fed's most recent release of data on its balance sheet reduction program shows a drop in holdings of $18 billion. This is far higher than the originally planned $12 billion stated by the Fed, meaning the Fed is dumping its balance sheet holdings much faster than it told the public initially. As the Fed continues its policy of hiking interest rates, generally the dollar index should rise in response. Instead, the dollar has been swiftly falling, only stalling in the past couple of trading sessions. If the dollar index continues to fall, even as stocks decline and rates increase, this may suggest a systemic risk to the dollar itself. So writes Brandon Smith, is a massive stock market reversal upon us, okay? Dated February the 7th, 2018. Okay, there's other articles here. I won't go over them. And I will continue this in part 2. Stay tuned.